Synthetic cash or commercial tax credit with depreciation? Which one's better? Let's start with synthetic cash. What is synthetic cash? Most people think, oh, it's like monopoly money. No, it's an actual real term that people are using right now to finance solar systems. Here's what it is in a nutshell. Synthetic cash is basically someone financing 30%, let's think a third-party finance company, of the solar loan, and then using traditional financing for the other 70% of the solar loan. So what does that mean and how does that work? Well, that 30% with that third party, they're going to take that and claim your entire system as a commercial solar system. Right now, there's still commercial tax credits, so they can take full advantage of those. Not to mention, there's currently depreciation for systems. And if they're the owner of it, which they have to own it for about 5 years, 5 to 6 years, then they can take that full benefit back and not have to pay anything back to the IRS if they sell it beforehand. Because of that system, they're able to write off about 50 to 60% of the entire contract value as their system, which means that they can capture a lot of that. And they give you the 30% or the 30% to your installer. What is the commercial tax credit with depreciation? And how is that different than synthetic cash? Basically, you can do the same thing, but without having to have a third party involved. So the individual owner of the home and the system can actually depreciate their system because it's an income producing asset. They're actually buying and selling to the grid and getting credits. So therefore, it is income producing. That income producing asset can then be depreciated. So you can depreciate it on Schedule C of your individual taxes. Now that you have this income producing asset and it's being depreciated, you can also qualify for the commercial tax credit and get that 30%. So you're capturing, as the homeowner, the end user, the full 50 to 60% of these credits that are coming in. Why would I choose one over the other? Well, basically with synthetic cash, another company is going to handle that for you, and they're going to take the difference between that 30% and whatever they are able to write off and pass along in tax credits, whether they sell that to an entity or they take that themselves against their own income. So they're basically making about 200% on return for 12 months for loaning you this money until they file the taxes for that year. Why would you do that if you can qualify for the other opportunity? Now, a lot of people don't know the differences between these two things or what these two things even are. And honestly, if you're in consumer, it's unlikely that you're familiar with any of these terms. And that's perfectly okay. The thing is that it can benefit you in many ways. The differences are, who do you want to handle it all? Do you want a third-party company to handle that for you and sign up with them? Or are you comfortable and okay with filing these taxes with a professional CPA yourself? Really, it comes to comfortability factor. In my opinion, I don't think there's any point to involve a third-party entity, as it's just them capturing a lot more of the benefits of which you could reap the rewards of. But a lot of people don't know that they can do that themselves. I would choose commercial tax credit with depreciation for my system every day, and we actually sell this type of product all the time. This is a great offering in 2026 because it's all still available. And both of these options are going to be expiring at the end of the year. So if one of these interests you, please click the link, find out more. We write a bunch of blogs about this and content about this that will really help explain it in even more depth.